Good morning and welcome to the ADS Securities Markets Update, beginning with yesterday's economic releases, which came in with mixed outcomes. The month-over-month factory orders increased by the most since March of last year, since March of this year, rising by 1.8% in June, which matches also the estimates. However, May's reading has been revised lower toward minus 1.1 instead of a decline again of minus 1%. And moreover, the factory orders, excluding the transportation, or as known as basically the core factory orders, increased by 0.5% in June, while May's reading has been even revised lower toward to a decline of 0.1% instead of a rise of 0.1%. The bad news also came in from the core, either year over year, the core and the orders, which basically declined, or the year over year factory orders declined again by 6.2% in June compared to 6.4% in May, and this is the 8th monthly decline in a row. In addition to that, the core factory orders basically declined for the 7th monthly decline, or 7th year over year in a row. In addition to that, it's declining by the most since the financial crisis by more than 7%, and this is also something that we have not seen since the financial crisis. In addition to that, the US dollar failed to rise following these numbers at the beginning. The US dollar, or the US 10-year yields, also remained around or hovered around 2.15%. The euro spiked as high as 109.88, and the sterling, or the British pound, advanced above 156.30, while the dollar yen also tumbled back below 124. A few minutes ago, we've seen the Federal Reserve member Lockhart, who basically noted that September's meeting could be an appropriate time to raise rates, and this comment had a notable impact on the market. The US dollar spiked sharply across the board again. The US dollar index increased to as high as 97.80, up from 97.20s. The euro tumbled back below 109. The sterling also fell back toward 55.70s, and the dollar yen jumped to as high, or to a new session high, along with the dollar Swiss and the dollar CAD. In addition to that, this is basically occurred despite the fact that Bloomberg reported that the probability for September's rate hike is basically around 38% only. In the meantime, we suspect a choppy range to continue until the US jobs report is announced on Friday, which is likely to clear the view. During the Asian session today, there were also a few economic releases from New Zealand, which had a notable impact on the New Zealand dollar. The jobs report came in with another disappointing outcomes, as the employment exchange slowed to 0.3% in the second quarter, and the first quarter has been revised even lower towards 0.6% instead of 0.7%. The unemployment rate also ticked higher toward 5.9%, up from 5.8% as widely expected. The New Zealand dollar tumbled from yesterday's high until today on the back of three negative catalysts. The first catalyst was the GDT price index, which declined by 9.3% in yesterday's auction. The second catalyst was Lockhart remarks about the Federal Reserve raising rates in September, and finally the jobs report. Basically, which came in also at least less than expected. And from a technical analysis point of view today, the pair failed to break, or since yesterday, the pair failed to break above its major downtrend line, which stands at yesterday's high at 66.17. Therefore, the outlook, or the negative outlook, remains bearish as long as the trend remained intact. In Europe, we wait for the services PMI today. However, the biggest impact is likely to come in during the US session, as we wait for the ADP non-farm employment exchange, the trade balance deficit, and finally the ISM non-manufacturing PMI. A significant impact is likely, especially if the numbers come in with any surprise, whether it was a positive or a negative surprise. This is it for today. You can follow us on our social media sites, Twitter, Facebook, and YouTube, to get the latest economic releases, reports, and analysis. Thank you for watching. I'll see you once again tomorrow.